Hello children, welcome to digital classes of Christ Church Convent Higher Secondary School Gadarwara. This video is for class 11th. Subject is accounts. Chapter number 12, Provisions and Reserve, part 1. Children, the age of modern commerce, so it is full of uncertainties, and the factor of risk has increased a lot. If business is not making its own efforts and things are not pre-planned, then these uncertainties will put an adverse effect on business, especially in financial matters. And for this, nowadays each and every business enterprise prepare and pre-plan for this. So there is a chance of bad debts in business, chance of obsolescence of old technology, then chance of stealing, rotting, fire cases, etc., etc. And when these casualty happens, so it affects business financially, because finance is the blood of any business enterprise. So to be the safer side, business organization create some provisions and they keep some reserves for their bad times, for their tough times. So let us understand the meaning of provision first. Provision is that fund which is generally kept for accrual basis expenses, especially for the current year. And we cannot say the amount of loss, it is always uncertain. Suppose goods are sold by a businessman on credit, so there is a probability that the debtors may not pay full or may pay partially, and rest of the amount is not paid by the debtors. So it's a loss, but it cannot be fixed at the time of selling. Means there is no determination for this. It is uncertain that a debtor may get full amount of money, or else may get partial amount will means is received and partial amount is not received. So what will happen? The businessman and business both will have to suffer a loss. So for this, provision for doubtful debt is created. Okay, so according to Indian Company Act 1956, that amount which has been set aside or it is retained for changing depreciation on assets, for their renewal or writing of their values. Then second may be the amount which is kept aside for such expected liabilities whose amounts cannot be determined such amounts are called provisions. Okay, so on the basis of this we can go ahead with some characteristics of provisions. You can see on your screen. First, provision is the amount which is kept aside or it is written off for the known losses like depreciation, heavy repair expenses or renewal of assets. Second may be expected losses like provision for doubtful debts, provision for discount on debtors, provision for disputed claims and workmen compensations. Third may be provision for outstanding expenses and payable taxes. Fourth, amount of provision is entered in the debit side of PL account because it's a loss and expense of the business. Fifth, it may be kept for expected liabilities where the amount is uncertain. When the liability is certain, then it is not said a provision. It is just a liability because it is known and it is shown in the liability side in the balance sheet. And sixth is the amount of provision is normally not used for making any investment in external securities. It should be done compulsorily by the business whether the business is in profit or it is in loss. And it is also called a specific reserve which is deducted from the related assets in the balance sheet. So some of the provisions about which we already had talked. Now what are the objects or the importance of provision? So the first object making provision is to determine actual business profit. If provision is not kept aside, then business will show more profit and things cannot be monitored or supervised or can be kept under control because that will be a super picture and balance sheet will show sound financial position due to which there may be a chance of carelessness. Second, the point related to this is to determine true financial position. So when certain losses and expenses which are expected in the current year are kept aside, then the real asset and the real liabilities can be known. Third, when there is a requirement to provide the future expected loss like provision for taxes or repairs or renewals or provision for pending court cases, etc. for this. So all these are the reasons for which provision is made. Now we'll come to the important provisions, that is provision for bad and doubtful debts, about which means I gave an example for you. So when it is created when amount is not received from the debtors. So that is debited to PL account to provision for doubtful debts when provision is created. Okay, so we'll come to need and object for provision of doubtful debts. We can write off the loss in the current year first of all. We can know the actual position of debtors, means how much money has to be received in the books. It provides financial security against uncertainties, and most important is it creates a true and fair balance sheet. Creation of reserve for doubtful debts reduces the expected losses and shows the amount of debtors which are likely to pay, and financial accounts become reliable. Okay, so this is all the need and object for this. So you keep reading this. We'll do some of the illustration in next video. Thank you.